Are you in mortgage prison? It's what I'm calling negative amortizing mortgage borrowers, meaning that you will never pay down your mortgage because instead of paying it down, it is actually growing instead, meaning it's getting bigger and bigger and bigger. And are you reading headlines about this 40% payment increase and you're scared? Well, this video is for you. I personally am not a big fan when media, a lot of the headlines out there are sensationalizing something because using fear mongering to get clicks. But everything that they're saying is partially true, and I don't blame them because that's their business model. So this is exactly why I'm making this video to reverse sensationalize this mortgage prison phenomenon. So if you find yourself in a negative amortizing situation where your mortgage balance is growing on the properties that you have, make sure you stay tuned. And if you do want to talk to me about kind of your unique situation after seeing this video about, whether you're negative amortizing or trying to buy, sell, invest so that you don't negative amortize, you can book a call with me using the link right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and a question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run and operate a RE/MAX in the Greater Toronto area on top of making awesome educational tech content just like this one for you. And if you find this video helpful with your negative amortizing situation or mortgage prison, make sure you help me spread the knowledge by smashing that like button and subscribing to your Prime channel so that we can get the knowledge out there. And again, if you do need some help or you're kind of fearful of this kind of negative amortizing situation or you have other friends and families, make sure you share this video with them so it gives them a little bit more information, because I find that, with knowledge, it will prevent you from being scared and all the fear mongering the headlines are putting out there. So again, thank you very much for sharing and subscribing. Are you negative amortizing right now? Are you in mortgage prison? I would say pretty, proud of myself for coming at that term. But there's this headline that came out, I talked about last week, or not, on Tuesday's episode of the video, where saying that payments will increase 40% when they renew. Oh my God, is the world ending? Oh my God, is real estate going to crash? If anyone has ever watched Anger Management, Goose Fraba.
Now repeat after me. Goose Fraba. Goose blah blah.
Just relax. It's okay. I'm going to give you all the options and kind of the timeline for you in this video so you won't freak out. You have the information, armed with the information about your property that is actually negative amortizing right now. I'm going to break this up into two sections, right? So I'm going to have it for your personal home, like the one you live in, you and your family live in, and then you have it for your investment property, which obviously you have tenants for. So as a quick debriefing, this applies to anybody who's got a variable mortgage, like the negative amortizing mortgage prison. If you've got a mortgage in the last 3 to 4 years at RBC, BMO, CIBC, TD, essentially everybody in Nova Scotia, your interest rates are higher now, but your payments were the same up until this rate hike. So your payment barely covers your new interest rate, and all that outstanding interest is being tacked on to your existing mortgage, meaning that your mortgage balance is going higher and higher and higher instead of going lower and lower and lower as you pay each month. So, mortgage going up instead of going down. So we're going to talk about the options that you have and what you can do before you kind of freak out and you actually really start considering selling, because you have time, and this is why I'm making this video. I'm going to start with the personal home one, but if you want to skip to the investment property kind of recommendation, timestamp for you right here. So your personal home is in mortgage prison. It's negative amortizing. First step, think about restructuring the loan, right? So what you need to do is you're going to find out the value of your home that you live in. And again, if you do not know how to do that, you can book a call with me or shoot me an email using the link that's right here, www.chatwithzen.com, and I'll provide you a free evaluation of your home so you can get an idea of what that is. Then you want to look at your mortgage statement, right, and find out what your mortgage balance is. Now you got two numbers, right? Look at which one is bigger. If the mortgage balance is bigger than your home value, yeah, this is not the news you want to hear, but you don't really have too many options other than to sell. But of course, depending on the type of property you may have, like that you're living in, and when your mortgage is actually going to be coming up for renew in the next few years, you may have some time. You may not need to sell right now. So don't panic, don't panic, don't panic. Goose fraba. Because the market is still on an upward trajectory right now. Again, this is just one that's kind of hard to generalize without knowing the type of property. So I'll do my best to give you an idea, right? So I would say if you own a condo where your mortgage balance is greater than the value, the chances in the next few years of that flipping around where the value of the home is greater than the mortgage, like appreciating so that you could restructure the loan, I would say is low, right? And I'll talk more about restructuring later. And if you're talking about like a low-rise home, called like a townhome, a semi, a detached home, the chances where your mortgage balance is going to be smaller than your home value, given like the trends and demographics and who the buyers are right now for that type of product, fairly high, right? Now, if your home value is greater than your mortgage balance, you can likely, very good chance, restructure your loan, meaning you can refinance it so that you go from, say, negative amortizing, you stretch it back out, and the payment still makes sense so that your mortgage gets paid down. Obviously, the larger the gap of these two values, it means that the more equity you have in your home and the higher and higher the probability that you'll be able to reduce your payments and get back on schedule of your amortization of actually paying it down when you refinance. So if you are in that camp, do not worry, more Goosefraba, right? Now, what you will lose in these situations is you're going to lose time of how quickly you can pay off your home, right? Because if you were like 30 years, you stretch it back out, 30 years, you lose the 5 if you have a 5-year mortgage. Now, when you refinance, it depends on your personal situation, whether you can still do it, but it probably doesn't make sense to do it right now because rates are still high. This is especially true if you have more than 2 years left on your mortgage term. So if you did it in like 2021, you're halfway through, maybe more, a little more than half, you still got some time. The less time until your renewal, the lower the probability of you being able to reduce your payment because the interest rates are still high. You're trying to wait out that duration so that the interest rates will come down. And right now they're still relatively high. Now, the next consideration for you is whether you can restructure or refinance your home is your ability to qualify for that new mortgage, because you're essentially getting a new mortgage right now, so you need to requalify. And if you barely qualified when rates were at 1 or 2%, unless your income is significantly higher or your debt service ratio is lower because you sold off an investment property or something, you may not be able to qualify to restructure your loan right now or in the future, or depending on whatever that timing is. Again, this is a case-by-case situation. That's why I'm kind of giving a generalization, because I personally think whenever someone talks to me about this, everyone's situation is so unique and the risk tolerance is different. So realistically, the only people who should be afraid of negative amortization right now is this: the people where the mortgage balance is bigger than the value of the home, and or those who cannot refinance the loan because of stress tests or the income restrictions. And while there are definitely going to be people in this situation, I personally do not think this is going to be a majority of people, despite what everyone is saying, because the current mortgage delinquencies are like, I think at like 0.15% or like 17 or 18 bips or something. And even if they double, going to like 30, 35, that's just bringing us back to a 10-year norm as per this chart. So I wouldn't panic just yet so that everyone's freaking out, especially if you have time on your hand until renewal. All right, so the next one, investment properties. If you have an investment property that is negative amortizing, what do you do? Nothing. Honestly, nothing. I have clients who don't even know they're negative amortizing until I told them, because I reached out to them to check in on them. The reason why most investors honestly do not care about this situation of like negative amortizing is because it just means that they lose one of the 3 ways they can make money in real estate investing. So you have cash flow, mortgage pay down, and appreciation. I've talked about this before in the past. With negative amortization, you're just missing the mortgage pay down because you're amortizing upwards. You still have cash flow and you still have appreciation. Again, you just lose the mortgage pay down because your payment is going up, or so your mortgage balance is going up instead of going down. But you still have the other 2. But because rents have also gone up, they're still making money via positive cash flow right now. If anything, this has become a bonus. If you think about it, this is a feature for them, not a bug in kind of the system. This is why there aren't a lot of inventory out there. And then you have the investors who can wait it until the market, kind of comes back, which kind of already has, depending on your type of property. So they're not afraid. Now, the only potential investors who may have some fallout are, I would say, condo investors who are cash flow negative, even without the payment increasing because of the negative amortization. But again, if you can hold on right now with that smaller negative amortization, you might as well. And you try to re-amortize, restructure your loan when the renewal comes up, hoping that the rates are lower and hoping that the value of a condo has gone up. Again, I would say lower chance, but the condo market could rally in 2-3 years depending on your renewal date. And that's it. Now, as for the market in 2026, when this renewal thing is supposing, do I think there's going to be a pileup in inventory in spring 2026 when a majority of these renewals are bound to happen from the 1% interests from like 2020 and 2021? No, because most people who have the option to sell, refinance, or do something that I just mentioned in the above, like in the video, right, would have done it already prior to the renewal period so that they're forced their hands. Most people know, right? Or, they get bailed up by the banks, but just bailed up by the government. And I personally believe this is just another narrative that's being crafted, right? It is another form of forward guidance by the central bankers telling, hey guys, real estate's a bad investment, stop buying it, cool the market, so I don't have to increase interest rates for inflation. Because right now, they're honestly just cornered in a tough spot between inflation and high rates and, blowing up the economy. One of the three, right? So remember, all this chatter about like the mortgage deferral that we had after the pandemic and tons of inventory, what happened? Nah, nada. Then we had to talk about the trigger rate and a lot of inventory coming like a few months after. Nah, nada. Then we got higher payments because of rates. People had to sell. Nada. Still lowest inventory in the last 20 years. And now we're just talking about mortgage renewals. Again, probably a nothing burger as well, but time will tell. The first two I was kind of worried because they kind of sounded like legit things. But now that we see more and more of this, Toronto's a lot more resilient than most people think. But of course, there will be some instances where there are distressed sellers, but will it be rampant enough where inventory builds up? And as inventory builds up, that's how prices come down because the supply demand rebalances. Can we build up enough inventory for the current state? No, doesn't look like it right now. Again, things could change, but at the moment right now, doesn't look like it. And I hope this calms everyone's nerves down with all this negative amortization talk. Goose fraba. And if you are looking for a more unique strategy for your negative amortizing situation, how to get out of it, or trying to get a little bit more information so you can make the right decision, you can book a call with me using a link that's right here. It's www.chatwithzen.com. And before I sign off, big shout out to Brian's mom. Woo! You're the real MVP. Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?